Tesla, though, is leading a lot of those gains in tech after beating analysts' expectations in its latest earnings results. This coming ahead of reports from Amazon, Apple, Meta, and Microsoft, which will all be out next week. So with the Mag 7 top of mind, how should investors play the tech trade? Joining me here at the desk is Tony Zipparro. He is the CEO of EquitySet. And Tony, let's start there with Tesla. Shares are rallying this morning, but expectations were low heading into this print. So what does it say, if anything, about what we can expect from those other Mag 7 names?
Yeah, absolutely. I think it's a huge surprise to a lot of people with how high it's ripping today. A lot of the good profit numbers being boosted, revenue shrinking a little. I think it's more of a trade though, right? Tesla's been a little bit of range bound. It had a big gap down, right, just a couple weeks ago. And so I think from a numbers perspective, it's good for Tesla. I think in the short to medium term though, it is a trade play. And I think if it approaches and closes high above a 260, 265 level, I think you buy it because I think it's going all the way to 300. However, if it kind of stops, right, pauses, I think it's going all the way down to 200. And so good prospects for Tesla, increasing margins, increasing profits, declining revenue, going into a questionable environment. I wouldn't go all in on it yet.
Okay, not all in on Tesla. We know it's a pretty volatile name. Is there any read-through we can take from Tesla earnings on what we could expect from a name like Meta or even an NVIDIA later on in the earnings season?
I think you're going to continue to see strong earnings, right? One thing that's been persistent and really hard to make a bear case for is the largest companies and the largest market cap companies like Meta, like Amazon, like all the technology companies as well, they are really doing a number, right? A good number on earnings. They're growing, and I think they will continue to grow. I think it's how much that price action matches with the growth or growth expectations that is the risk. And so I think, Microsoft, Meta, they will all report very good earnings, right? Especially bottom lines. But I think the thing to watch for is revenue declining, is consumer fundamentals deteriorating a bit, because that's what's going to catch, I think, these stocks off key.
And I want to talk about the market rotation out of big tech into some other areas of the market. It's interesting that you say the rotation has, quote, largely run its course, which is different from other strategists we heard from this week. So why do you think that is, and what does that say or mean for equities down the line, especially since we're seeing stocks hover at all-time highs?
Yeah. I think the rotational trade, and a lot of the trades lately over the last couple months, they've been so fast and so quick to kind of shift, right? Money is going very quickly into certain names, right? Into the China trade, right, weeks ago, into the rotation trade. And I think that fast, that soon, is a little worrisome. So I think it could play out over the next year, 2 years. But I think in the intermediate, it's just too much is propping up these names. And if we see any sort of weakness, right, or people pulling money out, people going to higher yield savings or bonds, right, with the spike in we're seeing there over the last even just week, that's where I think kind of the risk is at. I think there's good names, but I think you have to buy them at 15, 20% off their highs. I think you focused on the S&P, weighted 100, right, and maybe stay away from the top 20 if they're within those ranges. But that's where I think you're not trying to put a lot of new money to work, right? All your life savings right now. I think you have to kind of wait it out and see what happens.
And to that point, you say that value plays that didn't participate in the rally, they may become value traps. So can you define what you mean by a value trap and what names you would avoid at this point?
Absolutely. And I peg myself a bit more of a value investor, right? I like things that seem to be undervalued because they have a lot of price potential going forward, fundamental growth. And so when I'm seeing a lot of the names that haven't participated, right, you're seeing Xerox's, you're seeing even Disney's, right, Nike's, a lot of names that have not participated in the initial rally or the rotational rally. That's where I think it can't go much lower, right? It's near 52-week, it's near all-time lows. Well, it's got to go up 10, 20, 15%. And I think the reality is if the economy stumbles, and again, we hit a little bit of a plateau in terms of growth or even some contraction, those names will continue to go lower and lower and lower. So that's where from a value trap, the Walgreens, right? The names that have just been beaten down and are down 30, 40, 50% year to date, those look attractive when a market with so many stocks hitting new highs doesn't look as good to investors.
That's a potential risk. Another risk that I want to quickly hit on is the election. And the polls show that Trump is slightly edging ahead of Harris. How do you view the outcome of the election in the context of markets? And as an investor, should you be repositioning yourself or protecting yourself in any way from that volatility?
Yeah, it's sneaking up on us for sure. And again, neck and neck. And I think that's a risk in terms of, while other patterns might have played out depending on incumbent party coming in, rally continues, right? All these things that have happened in the past, I don't think you can necessarily rely on that. And so I think what you have to do is be defensive, right? No matter if it's Republican or Democrat that comes into office, just with market at all-time highs, volatility increasing, I think it's defend yourself, take a little bit of money off the table, because whatever happens, I think there's going to be some money moving around out of the market, out of stocks, just because we seem to be at such extremes.
So defensive, look for value, but don't fall into those traps. Okay, Tony Zipparro, EquitySet CEO, thank you so much for joining us today.
Thank you.
Appreciate it.